126 of 21, we have the FOMC meeting today. So we have a big gap up, a bull gap in the NASDAQ 100 futures. We will have a nice gap open on the opening bell from oversold market conditions. The Dow will gap up roughly about 300 points, 400 points. Uh, let's take a look at the S&P. S&P is gapping up on the futures to the 200-day moving average after being beaten down. It's a dead cat bounce ahead of the FOMC meeting, expecting the Fed to bail the market out. Well, yes, every oversold market gets a bounce, and that's exactly why we went long on the markets yesterday, knowing that they would do the same playbook, gap up a very downtrend volatility gap. I will just tell you, you haven't sold yet, you better start selling. For you retail traders out there, I know what you've been doing and what you've been watching and how you've been getting whipsawed every single day. You better sign up for that free 5-day trial. You haven't seen nothing yet. So, like we said many times, volatility works both ways. But so far, this calendar year, every volatility gap has been sold down. Now, granted that you get volatility, nothing goes parabolic straight down. The bulls will get their upside, but the market still remain in a downtrend. The Jerome Powell meeting today is everybody thinks a Fed has to bail out the market. Well, that's not what their role is. Their role is to raise rates because of inflation. If they raise rates today, that would not be a negative. It would be a positive. So we told people in a special report that we put out on the oversold market conditions. Yeah, we did. And that report came out just on Sunday. It was a special report and it was a bull report. We gave a bull report there and so forth and whatnot. So, one of the things yesterday, the futures were tanking 350, 400 points, and they were. And that volatility is not going away. You think because there's a gap today ahead of the FOMC, you think that volatility is going away? No, 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 no. And that volatility is going to stay here for the calendar year of 2022. It's a trader's market, and you better know how to trade the pop to sell. So when stocks pop, they're going to sell. And when they sell, they're going to sell for good reasons. Valuation. Valuation. They're fighting for values of 1921, year 2021. I'm just kidding. Is that they're fighting for valuations that are overvalued. So where stock prices have sold down to, there's a lot more downside coming in 2022. You haven't seen nothing yet. This is volatility, upside futures volatility ahead of the FOMC meeting. The short sellers get squeezed on the open. It propels them up. The trends are down, they're not up. Enjoy this little upside volatility today. If you've been buried in stocks, it's time to do what? Take advantage on the up days to sell them.